class, as you're very aware, we have a midterm examination, and I want to spend a few minutes with you going over the material to help guide you through the exam. So let's talk about initially your variable costs, fixed costs, marginal costs, and marginal revenue. Your fixed costs stay the same throughout the period, whether the period's a quarter or a year. And there are things like your factory, your building, costs that you'll incur no matter what. Then you have your variable costs. Variable costs vary with volume. So if you have to hire more hours out, have to use more electricity in your plant because you're producing more, then your variable costs will go up. Those are related to marginal costs. Marginal costs are the costs that you incur to produce one more unit of production. However, if you're maxed out of your plant and in that period you have to increase or change your fixed costs, then in that case variable costs won't equal marginal costs. And your volume maximizing output is always going to be marginal revenue equals marginal cost, because at that point it wouldn't make any more sense to produce another unit because of diminishing returns. Next up, we have fair value, present value. These terms are all part of calculating the value of cash flows, like in, say, a bond, for example. So you should be able to calculate the value of a bond given these parameters. So you'll probably get a problem that includes all of these but one. So future value is the future value of the asset. Present value is the value today. N is the number of periods until maturity. Now here's a stumbling block. N isn't necessarily years. A lot of bonds pay every 6 months, so every year there would be 2N. So a bond maturing in 10 years, N would be 20. Now, same heads up with payment. Payment, if you're getting payment every 6 months as opposed to every year, there'd be 2 payments per year, so you need to make an adjustment there. And interest rate, this is interest rate per period. Again, not necessarily per year, so you need to make your proper adjustments. That's a common pitfall. You want to know your accounting terms like audit trail, working capital, accounting controls. Just be aware of those. Also, you want to know accounts payable and accounts receivable are. Should be an R. So accounts payable is a liability. So if we buy something and we haven't paid for it yet, like if I buy a car but I haven't paid the dealer, then I have account payable. On the other hand, if I sell the car and the customer hasn't paid me yet, then they owe me money, I have accounts receivable. So you want to keep those straight in your head. You want to be familiar with what an operating budget is. So remember that these can show varying workloads and it can show management different scenarios with volume and how that affect revenues and expenditures. Quick video today, but if you go over those main points, you'll be able to be successful on the exam as long as you combine that with studying the overall material. But definitely know everything we talked about today. If you have any questions, send me an email or give me a call.